It's Thursday, December 15th, 2022. Markets absolutely rocked today. Dow Jones down 763 points. At one point, it was down over 900 points. NASDAQ down 360 today, was down over 400 at one point. We are going to continue to see lower highs and lower lows. And without the Fed running to the rescue of these fake markets, these markets are going to continue to struggle. They're going to continue to be jolted without the help from the Fed. The Fed has removed the punch bowl, ladies and gentlemen. Now, not to say that somebody's not going to come out and say something positive and use a word or two words and the market's going to rally. That's going to happen. But these markets are doomed without the Fed rescuing them, starting up the printing press, expanding the balance sheet, and lowering interest rates. And that's exactly what these markets want. We said this years ago. You pull the Fed out of the picture, you take the artificial injections, you take the drugs out away from the addict, which is these markets, and these markets will not be able to function, and they cannot function without the Fed. Yesterday, they should have collapsed, but I guess it took 24 hours for them to digest that the Fed is not coming to the rescue. And there are still people out there still believing that the Fed is going to pivot literally tomorrow. I don't think it's going to happen. It didn't happen this year, and I don't see it happening next year. The Fed is going to wreck the economy. It is going to wreck housing. It is going to wreck the stock market. It's all going to come tumbling down, ladies and gentlemen, and this is what you better be preparing for. And if it doesn't happen, great, wonderful. Then they're going to create hyperinflation. So you better be prepared for that, because if they do pivot, we are going to get hyperinflation. I want to share a bunch of articles with you today. None of this in order, but all of it very, very important. Share of Americans living paycheck to paycheck rises to 63%. I think the number is even higher than that. I mean, a couple years ago, they were reporting 80%. I think it's worse than 63%, but let's go with 63%. This is a staggering number. This is not the time to keep up with the Joneses. That is for sure. This is the time to prepare to lose a job. This is the time to prepare for the greatest depression the earth has ever seen. It is coming. It has arrived. It is knocking at the door now. Today is another reminder of how fragile these markets are. And it is going to continue in housing, in autos, in RVs, in retail sales. This thing across the board is going to be so destructive. This is going to get out of control. And in 2023, if things keep going at this rate, how many people in 2023 are just not going to be able to afford to keep their homes? They keep telling us that housing is going to be fine. It's going to be stable because there's not a lot of inventory. The consumer is strong. No, the consumer is not strong. There's plenty of inventory out there. Well, people can't move because interest rates, mortgage rates are too high. So if they got a rate at 2.5%, they can't move. They're not going to move and pay 6.5%. What happens when they don't have a job and they're forced to move? That's what we're going to see. It doesn't matter how much inventory or where mortgage rates are at or where they're not at. What matters is if you have a job. And if Citibank is right, they're predicting 2 million layoffs in 2023. That is going to absolutely bring the housing market to its knees. And we're already seeing it begin. Nearly half of young adults are living at home with their parents, spending more on luxury goods. This was on Fox Business today. People between the ages of 18 and 29, nearly half are paying less than $500 per month living at home. And I guess they're going out and buying video games and going out to dinner and going to bars. What a sad state of affairs for the United States that we have people now not going out, working. When you're young, why not work 2 jobs? Why not work 3 jobs? They're staying home, playing video games, going out to the bars, to the restaurants. A survey conducted by Pollfish found Americans ages between 26 and 41, that's 1 in 4, living with their parents, 26 to 41. That's 25% living at home. Look, I think it's more than just going to bars and restaurants and buying luxury goods. I think a lot of people at this point are forced now to live at home. And I said this the other day in one of my videos. I see so many cars now in so many areas in Southern California parked out in front of a house, 4, 5, 6, 7, 8 cars parked in the driveway or on the street to one house. People are living in the garage. People are sharing bedrooms. People are moving back home. And this is a sign of the times. I was talking about this 2 or 3 years ago. I saw this happening. And now it's becoming more and more common. Here's one from CNBC. Retail sales fell 0.6% in November as consumers feel the pressure from inflation. This was worse than the Dow Jones estimate. They were estimating 0.3%. We got 0.6%. Let's look at where the pullback was. Furniture and home furnishings were down 2.6% in November. Building materials and garden centers down 2.5%. Motor vehicles and parts down 2.3%. Online sales down 0.9%. Bars and restaurants up 0.9%. Food and beverage stores up 0.8%. Well, of course they're up because they're spending more and getting less. But this is where it gets a little concerning. When we start looking at furniture and home furnishings, building materials, and garden centers down 2.6% and 2.5%, that number is going to get much worse as people just are not going to be buying homes like they were. People are going to be cutting back. And, we have a very large furniture store in our area. It's gigantic. I don't know how many hundreds of thousands of square feet it is. It might even be 1 million square feet at this point. I don't know how a place like that with that type of overhead survives with what is coming for the next few years in housing with job losses. It's going to be very, very interesting to see how some of these large furniture dealers and furniture makers survive. Goldman Sachs considering cutting bonuses by 40%. This on Fox Business. The cut would be the highest for the investment firm since 2008. This is showing you just how bad it's getting when you see Goldman Sachs cutting bonuses by 40%. Another canary in the coal mine. Here's one from CNBC. Home flipping profits drop at the fastest pace in over a decade. Investors are pulling out of the flipping business as profits drop quickly. In the third quarter, gross flipping fell 18.4% from the previous quarter. Roughly 7.5% of the third quarter home sales were flips. This is going to bring more pain to the housing market. When you look at how many investors were buying homes to flip, buying homes to rent, they're out. The investors and the flippers are getting out. And this is going to lead to more inventory, and it's going to be another blow to the housing market. So who's going to buy these homes? Home prices must come down. They will come down. Here's another one, this one from The Hedge. Costco, and these are just all reinforcements to what we've all been talking about for the last few years about this eroding and decaying economy. And now they cannot sweep it under the rug. They used to just rejoice and celebrate around the booming stock market, but now that's falling apart. So what's left to celebrate? We knew the economy has been falling apart for years, but everybody would rally around the stock market. Well, now the stock market is in big trouble, and they have nothing to celebrate now. There's no good news. We don't hear every day about how cryptos are going up 100%, 500%, 5,000%, the big rallies on Wall Street. Those days are over. Costco to hike membership fees as soon as January. Another barometer to the inflation problem and to the economy. This is another canary in the coal mine that now Costco is feeling a bit of the pinch, and they're going to raise memberships as soon as January. How high? I don't know. Costco's a nice store. I'm not the biggest fan. I don't really have any need for it. If you have, 4 or 5 or 10 kids, you might have a need for it. But when you want to buy a blueberry muffin, I just need 1 or 2. I don't need, 24 blueberry muffins. I don't need, 4 gallons of milk. I don't need, 12 loaves of bread. So it doesn't really, fit my lifestyle, but it's a good store. They have some good stuff there. But they're going to be raising prices for memberships. The hedge, U.S. Industrial production annual growth, slowest since March of 2021, down 0.2%. Another reminder the economy is slowing. Fox Business, affording gifts during the holidays has become more difficult for many Americans, poll finds. 57% said it's harder to do this year, harder to buy gifts this year. I don't, when I read something like this, I have to question, where am I living? When was the last time where we would read data or statistics like this, 57% saying it's harder to do this year? Now, yes, many people spend way too much. A lot of people haven't even paid off last Christmas, but we're seeing so many reports now where people are struggling. A lot of people probably, won't even be able to have a holiday dinner this year, just like, I think it was 1 out of 4 didn't do Thanksgiving. A lot of people will not do a Christmas meal this year, and now many struggling to even buy a gift. This is really concerning, some of the data we're reading today and how bad things are getting. But it almost feels like I'm in another world now. Going back, say 5 or 10 years ago, you didn't really hear people talking about their struggle to buy a holiday meal, the struggle to go out and do a little bit of Christmas shopping. That doesn't mean like, you got to tap out 3 credit cards to do it. But people are struggling right now, credit card or no credit card. The hedge, initial jobless claims unexpectedly tumble to 3-month low. Claims tumble 20,000 to 211,000. Now, that came out today. Those were the jobless claims for last week. This is not good news in all reality, because the Fed is going to look at this data and go, hey, we are aggressively raising rates, and they're trying to get unemployment to rise. They're trying to hit the brakes, slam the brakes on this economy. And when they only see jobless claims tumbling or tumbling 20,000 to 211,000, they've got to look at this and go, we're going to continue to raise rates. We may have to get more aggressive. Now, I don't know if these numbers are real. They probably not. Much of this data is very manipulated. And we're not really being told how bad things really are. That's for sure. We're not being told what the real inflation numbers are, how bad inflation really is, how bad unemployment really is. But again, they will use this data to justify more continuous rate hikes, more aggressive rate hikes. And so this to me was was shocking. The international man, Doug Casey, I was reading an article by him today titled 9 Meals Away from Anarchy. And I just kind of skimmed through this article, but check it out if you get a chance. No food at the store creates fear and uncertainty immediately. And there's a quote in there with a neighbor talking to another neighbor. Sorry, you're a good neighbor. We've been friends for years, but my kids haven't eaten today. Now give me that loaf of bread that you have, or I'm going to hurt you. That's how quick things can change. And people are very naive to think that we live in a place where people wouldn't do that. Even your neighbor, people you know, people you're associated with. And we talked yesterday about situational awareness. We talked yesterday about security and being prepared for chaotic times. And we need to talk about that, I think, on a more continuous basis, because look, you can have all the gold and silver, all the water, all the food preps, the generators, the flashlights, cell phones, alarm systems, everything. But if you cannot protect this stuff, you're going to be in very, very big trouble. Growing obesity crisis in U.S. prompts CDC to expand body mass index charts for severely overweight kids. We touched on this yesterday. One of the best things you can do to put the odds in your favor right now is to get in better physical shape. And this just came out on CNBC today. More than 4.5 million children and teenagers had severe, not regular, just not obesity, severe obesity in 2018. It is now 2022, but this is the last data count that we got here in this article. It's 2018. Let me repeat this. 4.5 million children and teenagers right here in the US have severe obesity as of 2018. One of the best things you can do for you and your family is get in shape. Get in shape. There is no excuse. There is nothing negative. There's nothing bad about getting in better physical shape. You will live longer. You will live more comfortable. You will move faster. You will have a happier life. You will have more self-respect. Your body will function better. You only get one body, ladies and gentlemen. Treat the temple with respect. That's all you get. I want to close with this last article. I thought this was really interesting. Silver coins found near Temple Mount prove Jewish history of Israel. They discovered some coins, and I just thought this was fascinating because we do talk about gold. We do talk about silver. These coins go back to when Nero ruled Rome. Interesting, Nero took power when he was 16 years old, ruled till he was 30 years old, and committed suicide. But think about that. He took over the Roman Empire at 16 years old. A rare half shekel coin from the Great Revolt from 66 CE to 70 CE, this during the Second Temple period. A few days ago, a wooden box was found with 15 silver coins, and was found proving the Hanukkah story of the Maccabees, which is found in the Negev, I hope I'm pronouncing all this right, desert. So I bring this article up. First off, I think it's completely an incredible find to find these coins thousands of years old, going back to biblical times and the temple, the Roman Empire, and they have a couple pictures of them. Incredible. I just love stuff like this. But the Hanukkah story of the Maccabees has been confirmed, found in the Negev desert. I don't know if I'm pronouncing any of this right, but I brought this article up because it proves to you and I that gold and silver are not going anywhere. They were here thousands of years ago. They will be here for thousands of more years. They're mentioned in the Bible in heaven, streets of gold. It is God's money, not going anywhere. But I just thought it was an incredible article, again, reinforcing the longevity and the history of gold and silver. And it's not going anywhere. Absolutely an incredible find, and it confirms more that God is real. We are in spiritual times. We are in spiritual warfare. Make sure that you are picking the right side, ladies and gentlemen, because you're going to be dealing with some very, very evil people in evil times. And the only way you're going to be prepared for it is by having the number one asset, which is even above security. It is your spiritual security. It is God. That is the number one asset. Next to that is security. And I believe that we could all be walking closer to God. We should be right now. And we should be thanking God, especially this time of year as we come into Christmas. Thank God for what you have. It's not about how many presents you got. It's not about where you're eating dinner. It's not about how much money you have. It's not about what you're driving, what your zip code is. It is that you are blessed. You're alive today. You're awake, and you're preparing for what is coming. That is the most important thing, and that you are walking close to God. This is all material, but we're here right now, and we've got to do the right thing, and we've got to pick the right side, because I do believe we're going to see some very, very dark times. God bless all of you. I'm out of here. Make sure to give this video a thumbs up. Make sure to share all of my videos, and make sure you subscribe. See you later.